Hi, everyone. Welcome in. We're going to give everybody just a minute or two to join our Zoom. We have lots of people interested in this education series, so I'm really excited to have you here. So I will go ahead and introduce myself. I am Tammy Jansen. I'm the COO and CFO here at Portfolia. We're really excited to kick off this six-part education series. I'll give you a little background on myself. I spent the early 15 years of my career as the CFO of three early stage venture funds. I then co-founded a digital health startup and spent the next 7 years as CFO of that company, building the company, raising venture capital funds, building a product, getting to first revenue. And then I've now been with Portfolia for about 2.5 years as COO and CFO. So I've sort of seen venture capital from all sides, which is exciting. And I am really proud to have joining me today Dr. Faz Bashi, who is a fund partner with Portfolia's Femtech Funds 1, 2, and 3, as well as our newest Women's Health Fund 4. So Faz, please go ahead and introduce yourself.
Thank you, Tammy. And I'm delighted to be here. Welcome, everyone. Tammy forgot to mention that she's also a Kauffman Fellow.
Sorry, yes, I'm also a Kauffman Fellow. Thank you, Faz.
Very important. The world of venture capital revolves around Kauffman Fellows. And so my background's in healthcare and science. So I spent most of my life working in hospitals and doing scientific research, immunology, virology, microbiology at the bench. About 20 years ago, I started getting pulled into the world of angel investing from my friends, a member of Life Science Angels, Berkeley Angel Network, also part of the Angel Capital Association's network for syndication in life sciences. And I'm just super excited to be part of this amazing family at Portfolia, where we're focusing on this incredible space. As you may have heard the reports, this has been a space that's been around for as long as women have been around. Women's health is super important. It wasn't just invented yesterday, but in terms of financiers, there have been reports that have been put out lately that there have been really a lot of exits in this space and a lot of economic potential, and obviously the good that will come to humanity for getting these unmet needs solved.
Great. Thank you, Faz. Before we get started, we'd like to get to know our audience today a little bit. So we're going to launch a quick poll to understand everyone's investing experience. So Elizabeth, if you could drop that poll in for everyone. This first session is designed to provide an understanding of the structure and purpose of venture capital investing. For those of you who are curious about it, maybe exploring your first investments, or you just want a better understanding of how this asset class actually works. We are going to be explaining traditional VC, but also pointing out along the way how portfolio funds are different from traditional VC. We want to encourage questions throughout, so please go ahead and drop them in the chat anytime. So I'll be following that chat and we'll try to answer them as they come in. Venture capital is not intuitive. If something feels confusing, it usually means you're asking the right question. We're also providing a venture capital glossary of terms for your reference, which we'll drop in the chat now. It's downloadable. We're going to try to explain terms and we'll try to stay away from acronyms. But if there's anything that's confusing along the way, please don't hesitate to ask us. So Elizabeth, if you could go ahead and share the slide deck. And maybe we can get the results of the poll so we can see who our audience is. Okay. Oh, we've got quite a few investors in portfolio funds. That's great. Wonderful. Welcome, everybody. All right, Elizabeth, if you could take us to the next slide. Just to talk about what our discussion topics are today. We're going to cover what venture capital actually is and how it differs from angel investing. Faz is a wonderful angel investor, so he's got a lot of great perspective there. How the VC model works, why venture capital matters, especially now, and what you can expect as a VC investor. This first session is really meant as an overview. In future sessions, we're going to go deeper into the specific topics that we're going to just hit a little bit on today. So if you can go to that next slide. So let's start with a simple definition. Venture capital is long-term, high-risk capital invested in private companies designed to grow very large, very fast. Venture capital funds are pooled capital on behalf of others, which are called limited partners or LPs. Portfolia refers to our LPs as members. With a Portfolia fund investment, you get more as a member than most venture capital investors. VC is an illiquid portfolio-based asset class. So when you invest, your capital is typically locked up for 7 to 10 years. So unlike public securities, you can't decide to sell it next quarter. You're sort of, once you make that commitment, it's a long-term game. VC fuels innovation by backing companies with the potential to scale quickly and transform industries. So not every startup is venture scale. Venture scale companies are built for massive markets, rapid growth, and outsized outcomes. So there are many excellent businesses, but they aren't venture businesses, and that's okay. So let's go ahead and launch another poll. What do you think is the most important role of a VC? So if we can go ahead and have you answer those questions, and we will dive into how venture is different than angel. So venture capital is different than angel investing. Angel investors often invest smaller amounts earlier based on personal goals that could be driven by passion or proximity to where they live, companies that they get to know. Angel investors make their own investment decisions and can choose to invest in any company they want. Research suggests that angel investors generally need a portfolio of at least 30 companies to achieve proper diversification to mitigate the high risk of early stage investing. In contrast, venture capital funds are managed by professional fund investors that make all fund investment decisions. Venture funds provide diversification by investing in a portfolio of companies based on a fund thesis. For example, Portfolia's Women's Health Fund 4 invests in companies providing solutions for conditions that affect only women, affect women differently, or affect women disproportionately, and will invest in seed stage through later stage. One of the other key distinctions between angel investing and venture capital is access to deals. So Faz, can you give us a little more color on that?
Yeah. So as I mentioned early, I started off as an angel investor, actually reluctant angel investor. My friends pulled me in. I was in a hospital. My friends were part of an angel group. They said, "Why don't you join us?" And I said, "I know nothing about this." So I'm in the same boat as those of you who are just starting off. I spent almost 4 years trying to learn the vocabulary and understand what this was all about. Is there any methodology here? And as Tammy mentioned, what I quickly realized that a lot of people come in with different understanding of the space. The check sizes vary. You're required to spend a certain amount during a year, but you can invest 5,000, 10,000, 15, 25, whatever you can put into a deal. And then we are also limited to our geography, right? Because angels like to be close to their deals. And then at the end of the day, as an angel or as an angel group, we really get what is offered to us, whatever is coming our way. If the terms are not what we like, we don't really have that kind of leverage to be able to say, no, this is what we'd like. So a number of distinctions there in terms of geography, capital, access to capital, resources, the network effect, including where the deals come from, and also our relationships into the ecosystem, and then all those relationships. So I'd like to kind of give folks some resources very quickly, Tammy. There are a couple of favorite books that I have. One of them is The Power of Pull. If you haven't read it, take a look at it. Rob Snyder wrote that book. The $1 Trillion Coach, about an amazing man who was responsible for coaching the biggest companies in Silicon Valley, from Apple to Google to Intuit, name it, all of that. So $1 Trillion Coach. And then Jim Collins writes a series of books, Good to Great. My sense of being both on the angel side and on the venture side is we have the best of class here in terms of Portfolia. So we have access to deal flow. We have a brand. We have passionate, committed members and lead investors. And we have this pull effect. So summing it all up together, to me, it's all about relationships. It's about who you know, what kinds of access you have to information. So that's really important. Data, reports, online databases, access to capital today and for tomorrow, because every entrepreneur will continue to grow and they need access to that. And then it's always about opportunities. Where does the deal come from? Are they friends and friends of yours? Do we know them? How do we build a relationship? So those are some of the distinctions between angels and VCs.
Great. It looks like everyone is asking if you could let them know what those books are in the
Oh,
chat.
one more
If you
time.
could put,
How? Oh,
okay.
in the chat. I'll put it in the
Well,
chat.
either way, yeah. If you don't want to drop it in the chat.
Very good. We'll do.
Perfect. Perfect. Okay, Elizabeth, can we go to the next slide? Okay, so now let's talk about the role of a VC. So venture capital plays a critical role in funding innovation, especially for new technologies and business models that are too risky or unproven for traditional financing. Many breakthroughs stall between research and market adoption. VC helps bridge this valley of death, as it's called, by funding product development, market testing, and regulatory approval. VCs fund transformational technologies that may take years to mature, but can produce outsized economic returns and social impact. One reason Portfolia exists is because entire sectors like women's health were historically underfunded. Capital allocation shapes innovation, and new investors can change that. So, Faz, can you talk to us a little bit about why funding innovation, especially in women's health, is so important right now?
Oh, okay. This is so important. So they're tied together. Innovation and women's health, health in general. So it'd be nice if everyone would look at women's health as everyone's health. But here's the reality: women are anatomically different, physiologically different, biochemically different, and the distinctions are important. And there's a lot of unmet needs, a lot of it having to do with a lack of research, a lack of connection into clinical trials, a lack of focus on women different than men. And I've heard many people say this, that women are not just smaller men. So, and it's really important. So that affects where science goes, that affects where opportunities, creation of startup companies, access to capital, all of those things tied together. So innovation to me is just hand in glove with, we need to constantly be iterating around the possibilities of new approaches. Some other investors that I know also have told me many times, well, how many solutions for breast cancer do you need? Well, we need innovation to be constantly innovative. Yes, we have mammography, but there are new approaches, and we have them in our portfolio. We have ClearGene that's doing minimal residual disease for breast cancer that can do it better, hundredfold better than what is already in the marketplace. So there's constant need for innovation. Women's health, I don't need to tell anyone on this call, but women spend at least a quarter of their lives more in ill health than men do. So the investment in women's health has an economic impact, has a family impact, right? And I think the data I've seen is that every dollar spent on women's health adds $3 to the economy, the global economy. So we could see trillions of dollars added to the economy by 2040, in 15 years, if we continue to invest in this space. And I'm not just saying this to men, I'm saying this to everyone, that this is an opportunity now to make these advancements happen. So there's an opportunity for high return on investment. We were the first in this space about 8 years ago. And again, I have the privilege of having been part of this team from Fund 1 through 4 now. There's opportunities here to increase productivity by improving women's health, by reducing healthcare spending. And then there's so many underfunded spaces. It's almost like we're just discovering that we are on the moon. We just got to the moon. We're the innovators in the space, and that's because it hasn't been studied. Polycystic ovarian syndrome, still don't have a solution for it, right? We still need solutions for ovarian cancer, and we have a couple of them in our portfolio again, right? We have Mercy Bio that's doing blood-based. We have FemDX that's doing cell-based. Autoimmunity, ovarian cancer, already mentioned, but ovarian aging is another important area as well. Autoimmune diseases. I could go on, but mental health is another big area because, again, as the ovaries age, the hormone homeostasis changes too. And if anyone's experienced brain fog for any reason, whether it's associated with self-induced embellishments in life or whether it's due to getting to the menopause stage, you know that it's a real thing and we need to have solutions for that. So I'm totally bullish on this. I'm delighted that others are as well.
Great. Thank you, Faz. The next role of a VC, investors are not just capital providers. The best investors support founders strategically. They open doors for them and they stay committed during the hard times. Venture investing is definitely a long-term relationship with our founders. Another role is to mitigate risk. Venture capital funds mitigate risk primarily by spreading bets across a portfolio of companies. We know that some companies will fail and they'll fail fast. A small number of big winners, along with many modest returns, will outweigh those losses. Diversification across company stage balances the early volatility of seed stage deals with the later stage stability of like a Series B or C deal. VC funds accept that individual investments are risky, but risk is not avoided at the company level, it's managed at the fund level. And that's what you have to keep in mind is this portfolio approach to investing. But finally, we want to be very clear that the most important role of a VC is to maximize the return to its LPs. The VC's primary customer is the investor in the fund. And VCs will see this, the successful VCs that maximize returns back to their LPs. Those LPs will come back around for the next fund and the next fund and the next fund. So it's a continuum. So let's see the results of the poll, Elizabeth. Very good, kind of split. These other roles are definitely important as well, but we just want to make sure that everybody knows our job as a VC is to return capital, to maximize returns to our LPs.
Can I touch on the human part of this just very quickly?
Of course, yes, please.
It's so important that we make this distinction here. One thing that I absolutely love about our team and our approach to entrepreneurs is that we are very helpful. We're friendly. If we don't invest, we give distinct and specific advice about what needs to happen next, what they should do. Should they stay in touch with us or not? Because sometimes opportunities are great companies, individual companies that will do well for them and their families, but they're not venture backable, meaning they have to have that scale that they can go to. And sometimes the entrepreneurs go away with the advice and they come back a year later and they say, I did everything you told me to do. And so I want you on our cap table. And we've had that happen so many times where the entrepreneur has said, Portfolia, I want Portfolia on the cap table. That's a brand. That is recognition for what we do, which is the human part of this is being an entrepreneur is super hard. It's super hard. We do everything we can to de-risk a deal, as Tammy outlined, de-risk a deal from top to bottom. Management, patents, market opportunity, exit strategy. But then sometimes things just go sideways. We never predicted COVID. We never depicted that the IPO markets might kind of decide to close and then open again. So many things happening, and it's hard on the entrepreneur. So I just want to make sure that everyone understands we do want to get ROIs. We do want to choose good companies that are doing important things in this space. At the same time, we want to be able to help those who want to be helped. And many of them do. Some of them are very early. They may not be a perfect fit now, but they might be a fit later.
Great. Thank you for that, Faz. Can we go to the next slide, please? So next, we're going to get into the nuts and bolts of how the model works. So we get a little chart, on the right, which is pretty rudimentary, but it kind of explains. I like flow charts. It helps me understand things. So venture capital funds are generally structured as partnerships or LLCs, limited partners or LPs. These are the investors that provide capital to the fund. General partners, or GPs as they're called, make the investment decisions. And then usually a management company manages the fund. It could also be the GP that's managing the fund. The first thing VCs need to do is develop a fund thesis. A fund thesis is a clear written statement that explains what kinds of companies the fund invests in and why. It acts as the fund's guiding philosophy for making investment decisions. And it's what you should use, as a guiding factor when you're making decisions to make an investment. The next step is raising capital from the LPs. Investors may be individuals, family offices, institutions, or foundations. Portfolia currently has 2,000 LP investors, members, which are primarily made up of women. So we're really excited, about our membership. Incentives matter. GPs earn a management fee to operate the fund and carried interest on profits from the sale of portfolio companies. So this means that GPs only meaningfully win if the fund performs well. So what you don't see on this chart is the money going to the companies, but then money will come back into the fund when those companies exit. Most follow the 2 and 20 rule, which you may have heard of, which means 2% management fee per year, generally for the life of the fund. Portfolia charges 2% per year for the first 5 years, and we take that fee up front, just so you understand how we charge management fee. And then 20% of the profits, which is the 2 and 20. Again, carried interest only applies to gains on the sale of portfolio companies. So as those companies have successful exits, that's when the carried interest would kick in. Venture investing happens in stages. We kind of touched on this a little bit, but pre-seed and seed are about ideas, teams, and early signals. Series A focuses on early traction and product market fit, and later stages emphasize scale and execution. Earlier stages mean higher risk, but more upside. And expectations will change by stage, especially as companies move along and progress. Early on, you're evaluating people, problems, and potential. And then later, you're evaluating hard metrics, repeatability, and efficiency. But diversification is essential. Foz, anything to add on the model?
No, this is perfect visual. Thank you for putting that together. And Tammy, if folks want to ask us questions, I guess they can put them into the chat box.
Yes.
And we'll do that. And I think Mary has a question in there too, if you want to address that one.
Yep. So carried interest is the 20% of profits. So it's referred to as carried interest or carry, but that's the 20%. So it's 20% of the gains on the sale of portfolio companies. So maybe Foz, you could take this next question. How do you evaluate the team and the idea?
Oh my goodness. Yeah, that's always fun. So it goes back to, I'm just going to put the acronym of RICO. For me, it's RICO. It's relationships, information, capital, opportunities, right? So it's useful to have domain expertise, but the relationships that we have in our ecosystem gives us access to those who are experts in the different areas, right? So I'm not a surgeon, but I have a lot of friends who are surgeons. So one thing I've said many times before, and I carry this ragged piece of paper with me everywhere, it's BYN, BYNI. It's actually probably about 5 years old now, but it's become so useful. Build your network before you need it. Build your network before, whether you're an investor, you're a corporation, you're an entrepreneur. So in order to understand the opportunity, you also have to become really good about evaluating people. And the pattern recognition here truly is about people. Do you know how to recognize the person who comes with knowledge, comes with understanding of what they know is a big problem? Can you see in their eyes that there's this glimmer of, I'm going to make this successful? Can you evaluate that they're able to raise money? There's a number of things that go into that very first encounter about the opportunity, about the market, about the people who are in this team. And we like to also see that that there are other smart investors who have taken a close look at some of these companies. So it's a multitude of things, But a lot of it, again, comes back to pattern recognition. I've been doing this for almost 20 years. In the first 4 years, I fell in love with every single technology that came in the door, whether it was bicycle wheels with lights on it or whatever. But eventually I realized this is a relationship business. It's also heavy on information. If you have access to information and you have access to people and you're able to look at markets and see where the trends are going, then you have a greater likelihood of, let's remember there's always unforeseen events, but you have a greater likelihood of having a winner in your portfolio, and hopefully one or more of them get those outsized returns. And as Tammy alluded to, it becomes the biggest winners for the funds.
So there's a follow-on. Do you have a system to identify great startups from the noise? There are so many startups out there in a finite amount of time.
Do you want me to address that, or you?
Yeah, sure. Go ahead.
So again, it's a broad net. What the difference between VC and individual angels or angel groups is the broader access to opportunities. Portfolio. I'm just going to use Portfolia as an example. Portfolia has a brand recognition. We've been around for 8 or 9 years. Trish Costello, our founder, is one of the former directors of the Kauffman Fellows program that creates elite investors like Tammy and many of the other venture capital leaders across the country. So while the entrepreneurs want us on the cap table, our friends in the ecosystem who are venture capitalists or family office leaders, they too recognize that we are Portfolia. We haven't changed our thesis, meaning that we haven't moved away from women's health. We're not also fintech, financial tech. We're not also fashion tech. We are women's health. And so we stay true to that, and we get not only a pull from the entrepreneur, but we get pull from our friends in the ecosystem. And then broadly, we have members all across the world. We do invest strictly in US entities, but we have friends all across the world who are also sending us deals. And we encourage you to do the same. If there are opportunities that look really like they have promise, then send them our way. We'll either give them advice or we'll hopefully figure out how to make an investment.
Right. Vicki has a question. Will we be able to see the valuation of the companies throughout the investment period? The answer is yes. We are very transparent. You will be able to see, we do official valuations at the end of every year, and those valuations are going to drive the metrics of the fund, and you will have access to the fund financial statements and performance reports. We'll talk a little more about that later. Another question, as an LP, what access do I have to the founder startup? You will, as an LP in the fund, you will be able to participate in when the companies come and pitch to our fund partners. You can join the due diligence team if you'd like to. I think we allow, I don't know, I think it's 6 to 8 members to come in on a due diligence team, and you'll be able to listen in to those the discussions with the partners, with the founders, and participate along the way. Once the companies, once we invest in the companies, I don't know that we necessarily give access, at large to our entrepreneurs. Just depends on what you're looking for. Then we can address that on a case-by-case basis.
And just one more and, which is, yep. Look, if you love a company and you think they're doing really awesome things, you know that social media does have an impact. So follow them on social media, whatever your choice. If you want to be on a business level, LinkedIn is an awesome opportunity for you to not only connect with the company, with the entrepreneur. At the end of the day, I just want to repeat, being an entrepreneur is such a tough job, right? So we never want to distract, we only want to elevate. So if you are able to do that through likes and through comments and through other connections, or you want to reach back out to us on the team and say, hey, I know how to create a distribution channel for X, Y, and Z, and I want to know how we should do that most effectively for the entrepreneur. That's a great way to do it too.
Yeah. Laura asked, can you share the average investment level per member? I think in an individual fund, the average investment is around $50,000. Our minimum is 10,000 to, to get started, but we have people that write, 250,000 or beyond checks. And we have so many of our portfolio members that have come into multiple funds that just keep reinvesting. So, we appreciate that as well.
Yeah, and transparency is really kind of unusual in a venture space, in a venture model. It's really unusual. I'm just going to, again, focus on fund number 4. We already have, what, 2 investments in our fund? It's
Three.
your 3 investments. So help me out, Tammy. Your
Yep.
choice. Your choice.
Yep.
Why am I blanking out?
Gamito.
Gamito. Oh my goodness,
Gamito.
Gamito. If you don't know Gamito, look
Yeah.
up Gamito. Amazing.
Yes.
Reducing the IVF cycle from
Yes.
weeks of injections to days. Imagine that. And
Mhm.
also, they've already had babies being born with this methodology.
Yep.
And I'm sorry,
And attention, Grace.
and attention, Grace. When you decide to invest in Portfolia, these companies immediately become part of your investment. So that transparency isn't normal for most venture funds.
Yeah, absolutely. Pevlin is asking, what's the average check size that portfolio writes to a seed or pre-seed stage startup that fits the thesis? I mean, I think for those really early deals, it's probably like, 100 and 150,000. Later stage deals, we usually do maybe a little bit more, maybe 250 or 300. It really is, we decide that on a case by case basis. Lots of
Yeah.
factors, factor
Yeah.
in there.
And a little birdie just reminded us that you can also use your IRA. You can do a self-directed IRA in these 10,000 or more investments if you want to. My understanding is also there's a way to do this through DAFs as well.
There is.
So that lots of opportunities to get involved and to learn. Education is a big. I spent 4 years silently taking notes in my angel group to figure out what the heck was this all about. Nobody was really kind of showing me the way. I had to do it on my own. So, but here you are. You have a network of 2,000 plus folks who are part of this family that can help.
So there's a couple questions about how to sign up for the due diligence calls. Once you, sign your documents and become a member of a fund, you can then sit in on the pitch calls, which are every month for each fund. And if you see a company pitch and the partners decide to move into diligence, you can just, reach out to us and say, I want to be on the diligence team. You can do it right there, in the meeting, in the pitch call meeting, or you can follow up with us after the fact, and then we will get you on those teams. How do we send great companies your way? If you go to our website, portfolia.co, there's a section for, I'm an entrepreneur looking for funding, and we have a portal that the companies can submit. Make sure if you are referring them that they add you as a referral source, and we manage our pipeline, and we'll look at everything that comes our way that fits the thesis. Let's see, what stage of a company does the portfolio fund typically like to invest in? I mean, we like to invest from seed all the way up to Series B, C, and beyond, just for diversification, kind of as we talked about on this slide.
Yeah, that's a nice segue to the next slide.
It is a nice segue to the next slide. Elizabeth, can we go to the next slide? So, Foz, this is a beautiful example of diversification across stage and sector. This is actual data here of our Femtech Fund 3 investments that were made. I believe there were 16 investments that were made out of Femtech 3. So can you sort of give everybody some color on what we did here and why it's so important?
By the way, kudos to our Portfolia team. Tammy, obviously you're our COO, CFO. Kudos to our team for these amazing graphics also, because being able to see this information like this is so helpful. So I want to remind everyone who's new to this, seed stage is exactly what it means, early stage. A is the next round where they're starting to grow. B is subsequently more growth. D is more growth, and so on and so forth. And as an individual investor, I have to tell you, being a member of an angel group, while we do have a good reputation, I've never seen a Series D or later than B, other than our own portfolio companies coming to us and saying, would you like to invest? So again, look at our percentages here in terms of seed, a nice healthy amount in there, about 30% or so. A, around the 20%. It's a really nice healthy mix. Series B, remember, de-risk, de-risk, de-risk. As they continue to grow, they're getting more and more of investors who are looking concretely at revenue, at opportunity, at potential exits, potential IPO. So then C, I mean, again, as an angel, and I look at my own portfolio, I don't have that high percentage of highly de-risked deals. I'd be very fortunate to have something like this as an individual angel. And then on the other side, in terms of sectors, again, a nice healthy mix. It isn't just one sector, right? We have some 20% plus in digital. Diagnostics is super important. In the early days, everyone just thought of women as baby factories. This is just a reproductive health type of thing. And we all know that's not the case. Look at all the different areas that medical devices need to be specifically tailored for women's health issues. We have consumer and wellness that is continuing to grow, right? There are less and less restrictions on what can come out for you as a person to be able to monitor your own health. So being able to have this really nice, broad mix of portfolio companies increases the likelihood that that one or more outlier investment that will be the unicorn of unicorns that might get $1 billion exit becomes the one that returns most of the capital plus more to the LPs.
Great. I'm seeing a lot of questions here around DAFs, so I wanted to, kind of circle back and address that. Yes, you can use a DAF to invest in both of our portfolio open funds, Women's Health Fund 4, as well as Rising America Fund 3. We like to, if you're interested, please reach out to us. We are approved on Impact Assets platform, so it would be a very simple, a simple investment through a DAF if that's something that you're interested in. And I read something recently that there's like an enormous amount of money sitting in DAFs that are just sort of sitting in public securities. So it's very simple. If you've got some money in a DAF and you want to just transfer it over to a place like Impact Assets, it's very simple. So please reach out to us and we'll let you know how to do that. Let's see. Here's a question. For things past seed, how much of that is follow-on investing? For example, Portfolia invested in a seed deal and then followed on with a Series A, or is this all new engagements only? And I think, for our new funds, obviously we have Femtech 1, 2, and 3. And so we do have some companies that are now coming back for follow-on investment. And so we will consider them in the new fund, but it is a new fund. It has a new set of limited partners. And so we will treat, even though it is a follow-on from a former or a past portfolio fund, we will treat it as if it's a new company with fresh eyes. We will have a partner lead that deal that did not lead it the first time. We'll try to be as unbiased as we can when we evaluate those follow-ons. But we definitely want to see those deals come in and support those companies if everything, if they get through our diligence process.
Information rights in these companies is also another unique thing that venture usually gets. And sometimes, unless it's negotiated by angels or angel groups, they don't get that. So the information is useful to know, how the companies are doing. And obviously, if we see something that is really looking like, again, it's going on that hockey stick. And again, your choice is one good example. We also did an SPV, a special purpose vehicle, which means that, outside of the fund, we know individuals want to make their own decisions. We open up an opportunity with the entrepreneur to invest into those as well. So knowing that a company is doing well means that we have an opportunity for something that's more de-risked.
And just to touch on, the direct investing opportunities or the SPVs, as Boz said, We do open those opportunities up only to members who have come into a fund. We're very big about diversification. And we like to see people come into one or two funds before you start making those, placing those direct investing bets. But that is another advantage of being a Portfolia member. There's a few questions about being first money into a startup or, Portfolio leading deals. So I just wanted to address that. Portfolio does not generally lead deals. It's part of our model. We tend to be maybe not the last check-in, but close to the last check-in to a deal. We like to make sure that the round it has come together and that it's providing enough cash runway for the company that makes sense. But generally, we do not lead deals. Let's see. I mentioned DAFs and self-directed IRAs. Can investors contribute directly from a simple IRA, or is a custodial fund necessary? You need to be with a custodial fund that allows alternative asset investing. The platform we like to recommend is Alto IRA. So if you are interested in learning more about investing through your self-directed IRA, please reach out to us and we will be happy to share that information with you. Let's see. I don't want to run out of time here. We got a little bit more to cover. Can we go to the next slide, Elizabeth? Okay, so now that we've talked a lot about how the funds are structured and how we've deployed the capital, based on a diversified portfolio. So what happens after that? So we want to make sure everybody understands, like once you invest your money, the fund invests the money in the companies, what next? Funds deploy capital, over 1 to 2 years. Generally, Portfolia likes to deploy that capital, pretty quickly. And that's during what's called the investment period. VCs will evaluate company progress and adjust valuations on an annual basis. We kind of mentioned that before. That will, produce markups or markdowns. They're sort of the, unrealized gains and losses or paper losses. And those will go into your financial statements. But the funds will provide financial statements and fund metrics. Portfolia produces institutional grade financials and performance reports every year, and those are distributed out to all of our members of the fund. And just understanding, like, some companies will fail. The saying is lemons ripen first, and that is expected and it's okay. But exits can happen at any time during what's called the harvest period. When those exits occur, distributions will be made to our limited partners. Those funds are not going to be held by the fund. As soon as we get the money in, we get it out the door as quickly as we can into the hands of our LPs. Most exits will happen through acquisitions, but some companies will exit through an IPO. And I think the thing to remember here is that patience is foundational to venture investing. Investors should expect a fund life of 8 to 10 years, especially doing early stage investing.
Can I just mention something?
Of course, yeah.
So lemons ripen first. I just don't want people to think that we invested in a lemon. No one does.
Of course, yes.
No one does. So the idea of a portfolio of 15 to 20 companies is we make good investment decisions. We do our due diligence. We look the entrepreneur in the eye and we go, we're trusting you with our capital here. We have LPs who are very excited about the space. But then again, something happens. The economy decides to go sideways. The channel for manufacturing all of a sudden becomes a dead end because you can't go offshore. Whatever the case may be, it happens. And it's not a judgment against the entrepreneur. In fact, a lot of times the burnt fingers, and I have many of them myself, the burnt fingers are part of what you are gaining from. You're learning from the experience of all of us, right? I have my experiences in certain sectors and I'll share them with you and we'll figure out whether it makes sense to go back into it or not. And then I just wanted to address, Suresh, I think, asked the question, why don't we lead? There's a number of reasons why. One is resources, being able to lead. Two, there's a number of mission statements here in Portfolia. One is we want to help activate men and women, but obviously the majority of our LPs are women. We want to help activate women's capital to get products into the marketplace, as Trish always says, product into the marketplace and services that women want. So that's one. Education is the second part of it. We want you all to learn along the way so that if you decide to stay with us and continue growing your capital this way, or decide to become a venture capitalist, then you have some education and experience behind you. And then it's the ROI part of it, right? So we can look at very early deals, but there's more risk and there's more involved in getting them to that A, B, C, D level. And we're very fortunate that we do get opportunities that are more de-risked, term sheets there, deal memo is ready, we do our diligence, we figure out whether we want to co-invest.
And I just want to go back and just explain, a little bit more about the company failures. So, I think this all goes back to diversification. We do want to make bets in early stage companies because those are the ones where you could really see, really maximize returns and get the great upside. But we know because it is extra risky that some will fail or maybe will only return capital. But we also know that because of our portfolio approach and diversifying over stages, that we are going to see, one or two companies are going to be big winners. We'll see many of the companies will be modest, decent returns, but they will be some failures. But those other modest returns and one or two big winners will definitely outweigh the losses. And so when we talk about a company that, a startup that may fail, it doesn't mean that the whole fund has failed. We are managing risk at the fund level and doing that by looking at these a diversified portfolio. So I don't know, hopefully that helps with some of the questions here. All right. Can we go to the next slide, please? So we want to take a minute and talk about one of our big successes in one of our other funds outside of women's health. We want to take a few minutes and highlight Canella Media. So this is an example of investors backing a large vision before market validation. So this is Isabel Rafferty. She's the CEO of Canella Media, the fastest growing Spanish language media company in the world. Back in 2020, after 120 venture capitalists said no to her, Portfolia's Rising America Fund invested in the pre-seed round at a $10 million valuation. Today, Canella has 76 million unique users and is valued at $400 million, which is a 40x multiple on our original investment. And so we have just a really short video clip of Isabel. Elizabeth, if you could play that, please.
But then after 120 something no's, there was, at that point, many people say it's a bad idea, but I knew in my heart this product was needed. And then I changed and I pivot and I say, hold on a second, I didn't even know there were women funds. I didn't know there were Hispanic funds. I had not access to what venture capital was. So I was learning as I went. And then I raised everything with women funds and minority funds. Then that opened my eyes. It's like those biases exist. Yeah. Not everybody has the same access.
So we love our Canella Media story, and we love Isabel. She's done amazing work at Canella. So let's see. Faz, I know there's a bunch of questions we probably missed. Elizabeth, can you go to the next slide, please? Okay. Which funds are open? So we currently have 2 funds open. Our Women's Health Fund 4, as well as our Rising America Fund 3. Both are opened to new investors and currently deploying capital into companies. Let's see. Is there any other questions? Oh, I see there's a few here.
Is there an option to see? So there's a link in there for anyone who's interested in watching a video on IRAs and DAP.
Yeah.
I think you got most of the questions.
I got most of them? Okay, good. So I know we still have 10 minutes left in our session today. Thank you so much for all the good questions. This has been great. But as we kind of think about what wrap up and key takeaways are, we have one more poll. Elizabeth, if you could launch this poll as we talk through some of the key takeaways. So first, venture capital is a long game. Diversification and portfolio approach are definitely the keys to success here. And we want you to understand that, you may not know everything today, but your judgment will improve when you learn by investing with experts. And I think the most important message is you don't need to start big. You just need to start intentionally. Capital determines which problems get solved and who gets funded. And thoughtful investors shape a better future. And I know that, Faz, you're one of our biggest cheerleaders there, especially when it comes to women's health and, putting money in the hands of these amazing companies. Do you have anything else to add that our guests should take away with them today?
Please connect with us on LinkedIn. Please follow our companies and obviously promote them any way you feel that's possible. And if you join us, it would be wonderful. We all know that women make about 80% or more of the healthcare decisions in the household, including our furry angels. So I do love the animal health space as well. We also know that a lot of unpaid caregiving time is by women. Women do so much in terms of life and making things happen. This is an opportunity, I hope, that you will take to get into the financial world, into this alternative asset world, which was restricted in the past to only large check writers. So most venture funds will not take checks less than 5 million, 10 million, whatever, if you're lucky to even get an invitation to go in. So my ask of everyone is everything that Tammy just mentioned here, please consider it, but also look at this as an opportunity to expand your own wealth horizon, not only for yourself, but also for your daughters and for your granddaughters and for everyone else who's looking at you and asking, hey, what are you doing with your capital besides the stock market?
So I love the comment that we just got. Time for my money to do the talking on my behalf. Absolutely true.
Yeah.
Thank you for that. Let's go to the next slide to give you all a glimpse into the next 5. And these are, today was meant to be just a, kind of a broad overview of all the things. We are going to, in the next 5 sessions, we're going to go deeper into learning about fund thesis creation, sourcing deals, how investors evaluate early stage startups, valuation, terms, and ownership. We'll really kind of dig into, the nuts and bolts of different scenarios from, up rounds or down rounds and what that means. Portfolio construction and risk management. And then finally, we'll do the last session on exits, returns, and outcomes. I would love to, hear feedback from anybody that is specifically looking for us to cover any particular topics, in any of these future education sessions. So definitely please reach out and let us know. Can you go on to the next slide, please? And these are if you are interested in learning more about our 2 open funds, please reach out. I think we dropped in a link to get in touch with Pema and Jen, our 2 investor relations ladies. They'd be happy to answer any questions you have. Any final thoughts, Faz?
Oh, I have so many thoughts. We could have another 10 days of thoughts for me. No, it's just such a privilege, Tammy, to be on a team with you and Trish and all of our lead investors and doing the work that we do. That's so important. And I'm delighted for anyone who's considering doing this. It's easy to read books and watch YouTube channels and say, oh, God, I wish I could be on Shark Tank. Well, you can wish all you want, but this is an opportunity to actually jump in and experience it, myself included. So again, almost 20 years ago, I got pulled in. I wasn't considering it. I got pulled in and I realized that, there's a part of all of us that always wants to ask the question, why are things the way that they are? And why not have other ways of looking at my health instead of what is happening right now? Why not? Why not is such an important question. So possibilities, looking at ways of, again, stretching the fiber of your own beings so that, again, for yourself, your daughters, your granddaughters, there's $30 trillion of wealth that's going to be transferred from you to your kids. And it's important not to restrict possibilities. The doors are open. Venture capital used to be just a good old boys club, and it's no longer that way. So I hope you'll join us.
Yeah, for those of you on the call that happened to be with us last week at our JP Morgan event, which was amazing, Boz and I were both there.
Oh.
As Trish said, the leading investor in women's health isn't a VC on Sand Hill Road, and it's not a large PE firm in New York. It is the 2,000 Portfolia members who are putting their money to work, to give us a better world. So I love that. Someone asked when the next session was. When you click on the registration link, you'll see when all of them are scheduled. The next one is February 19th. They're going to be approximately once a month, although there's a few gaps, but all the dates will be there, and we'll get them on your calendars for anybody that's interested in joining us at a further session. So
shout out to the woman in white on the left-hand side. Obviously, our team is super important, but you already introduced them. The woman in white right there is Summer. Summer is the CEO and founder of one of our portfolio companies, Hera Bio. So endometriosis is a big, big issue that no one has been able to tackle at all, really. It takes 10 years to get a diagnosis. Summer decided that she's going to tackle it. And if you could have seen Summer from the very beginning when we invested to where she is now, she also acquired a company for cervical cancer, and see how this amazing person has transformed. I get goosebumps every time I think about it. It's like where she's taken the business from a science focused thing to this business opportunity. We love seeing our portfolio companies get elevated in the space.
Hey, Elizabeth, can you go back one slide? Or maybe 2 slides? This one. So this is Summer too, with her hands up like this.
Yeah.
So this was from our event last week, and that is Summer, who Foz just introduced you to. Right. Next to Akash Bashi, who is Your Choice Therapeutics, one of our fan favorites, and this is Don Mattoon, the CEO of Mercy Bio. All in the same photo.
All in the same shot.
All in the same shot.
Endometriosis, cervical cancer, the first ever non-hormonal male fertility drug, pill. And then Dawn, who has a platform for blood-based ovarian cancer testing and others like breast cancer and other. I mean, just incredible.
Yes. So thank you all so much for joining us, for being here. Portfolia exists because informed investors choose to be here. So please reach out with any questions, and we'll see you at the next educational session.
Thank you, everyone.
Thanks, everybody.